Hello, YouTube. Welcome back to another video. Today is going to be a little bit different. It is not a breakdown. Rather, I am going to start going into individual concepts that are going to help you not only with your trading, but better understand how to find liquidity inducement trades, specifically with the daily cycle. The daily cycle to me is one of the most important concepts to learn, especially if you're trying to take advantage of liquidity in the markets. Now, to get right into the video, just to keep it short, what is the daily cycle? The daily cycle and the anatomy of the daily cycle is fairly simple. It is basically using time as a confluence, right? And I will mention this over and over and over again that time is very important when it comes to trading. Whether you're trading the London session, the New York session, or even Frankfurt, you have to understand what is going on during those sessions from a time confluence point of view. So to start off, what happens in the Asian session and how do we view the Asian session? The two ways we view the Asian session is that the Asian session is either inducement or liquidity buildup, right? So just to give you guys the anatomy of the daily cycle, normally we see price consolidate within the Asian. We see either the stop hunts of the low or vice versa, stop hunts of the high during Frankfurt. And then we see the opposite, right? So from a bullish perspective, we have liquidity buildup in the Asian, Frankfurt stop hunts to the low, and then price will continue in London, and then New York will either make a reversal and or a continuation, right? So just to give you guys the different variants of the daily cycle, the first one we have is the one I just showed you. The second would be the sell side, where we have Frankfurt stop hunts to the high, the London continuation, and then the New York reversal, and or the New York continuations, right? I will go over some live examples as well at the end of the video so you guys can kind of see how to piece this all together. Now, I'm trying to figure out what would be the best way to kind of describe this here. For example, let's go ahead and do a little example. Let's say the market was coming from an uptrend, right? And we saw pre-Frankfurt that the market started to consolidate during the Asian range. Now let's assume that there was an OB or a POI resting right below the Asian session, right? This POI could have been spawned from this area here, right? If there is a POI resting right below the Asian session before the Frankfurt open, what can we expect the Asian session to be? We can expect it to be not only this liquidity buildup, but we can also expect it to be inducement to this POI, right? A lot of smart money concept traders are going to find POIs in the Asian session around here, but this is going to become a smart money trap, right? Because so many people are trading smart money concepts now, this is no longer a valid OB. Rather, what we're waiting for is, again, these stop hunts to the low during Frankfurt session, London to continue the move, right? And now what can we expect? What is currently happening? Well, we saw that price not only broke or had a break of structure of the Asian highs, right? But let's perhaps assume that there was an OB over here, right? During the New York session, and London was continuing its move. We can expect what? A reversal and the move to go the opposite way. However, let's say there was no valid POI here. What can we expect? Well, let's assume that there was a POI kind of resting internally here. And we see that the market has been bullish, structurally has been bullish. We can expect during the New York session that price will retrace, mitigate, and run. So this is kind of the daily cycle at its barest form, right? And diagrams really are the best way to explain it. If you want to see a bunch of different variants, please DM me because I have a bunch of PDFs on them. I have probably over 100 of them, and they'd probably be really good to study. But I want to go ahead and run through some live examples because even though diagrams are great, it's very hard to apply the concept without kind of viewing a naked graph. So let's go ahead and pull up Euro USD here. Or actually GBP USD, and we can actually run through a trade that I took last night during the London session, which allowed me to kind of take advantage not only of the daily cycle, but also utilize liquidity inducement theorem. This won't be a complete breakdown, so I'm not going to go over all of the concepts, but I do want to remain our focus on the daily cycle. All right, so let's pretend here. Let's go on a bar replay, and let's go to the 10-minute just for the sake of time. And what do we see here? Let's get rid of all these annotations. If you want to learn how I read price delivery, again, please DM me. But let's assume here in the daily cycle, here is our Asian session, right? We see that the market is coming from what? A downtrend, right? After that downtrend, the market came up and now it is consolidated, right? Knowing that the market is coming from bearish momentum, we can assume what? Well, according to the daily cycle, if price is coming from a downtrend, like so, we can expect the stop hunts to the high, something for it to mitigate in the past, and then continuations, right? So what exactly happened here? We had a 4-hour OB, we had a refined 15-minute up here. No, we did not make it to the 15-minute, but if I move our way in here, right, we can see what? The Asian highs get swept, right? And once they get swept, let's move into the 1-minute here. We also see this trend line has been broken. Yes, I do use trend lines, but for deception, not for breakouts. So we have this trend line break. We had a sweep of liquidity, a refined order block. We tapped into that order block, retested this trend line, and then the market melted, right? And I will show this entry too at the end of the video. You can also visit my Instagram page at seisners.trading.journal, where you can see all of my entries every single day, as well as the setups, full setups that I utilize in order to take the trade. So yes, we have London come in and pretty much produce what I was talking about based off of the daily cycle. Price was coming from a downtrend. We had liquidity building up in the Asian. We then had Frankfurt sweep the highs, right? We had London continue the move. And now look what's happening. Remember I told you before that if there is an OB resting right below the Asian session, this OB becomes extremely valid. Why does it become extremely valid? It becomes extremely valid because the Asian session is also a form of what? Inducement, right? And if the Asian session is acting as a form of inducement towards this POI, that gives me reason to believe that this POI is very valid for price to go up. So what can we expect? Price to tap in and then run. Now, why? Why didn't London absolutely continue the move here? Well, that is a whole another daily cycle variant. The other daily cycle variant that I want you guys to understand, yeah, we can go ahead and clear this. All right, the other daily cycle variant is called the Asian whipsaw, right? And the whipsaw is where price could either be coming from a downtrend, an uptrend, it doesn't matter. Price can be plateaued, highs and lows of the previous day can be above and below the Asian session, it does not matter. What matters is that there is a resting POI above and a resting POI below. If there is not two resting high time frame POIs above or below, we cannot expect a whipsaw. Assuming that there are two POIs below and above, once we have this liquidity build up in the Asian, we can expect what? It to tap into that POI, run, tap into this POI, and then run. Now, all this is done primarily during the Frankfurt and London session. So now you're probably wondering, what do I do during the New York session? Well, assuming that this has happened during Frankfurt, assuming this has happened during London, the next thing I'm looking for is a continuation of London. Now, from experience, I never or rarely will take OBs that are in this imbalance here. Why? Because the whipsaw is telling me that most of the momentum has kicked in down here. An extremely high probability setup that you're going to see during New York is Frankfurt sweep the highs, tap into this OB. London come down, sweep the lows, tap into this POI, rocket. And then what's New York going to do? Right? Well, we swept these highs, right? These Frankfurt highs. So all these New York traders have just trapped Frankfurt. Right? And because we have just trapped Frankfurt, they're going to come all the way back down to this POI, right? Now, a lot of these sellers are going to assume that price is going to continue. That is not the case. We have now just produced order flow, right? Another POI and order block. And again, if time is around anywhere from 7:30 a.m. to 11:30 a.m., this OB becomes extremely probable, and you will see New York continue to move. So hopefully you have a better understanding of what the daily cycle is. I just want to do a very brief video on that. If you guys want me to do a very, very detailed video on individual daily cycle concepts, I can. But this was just a very brief overview of what daily cycle is and kind of how to trade it. So again, the different type of variance, price coming down a downtrend, liquidity buildup, stop hunts to the high, continuation, New York reversal, and or New York continuations. New York is a little tougher to trade because you do have two different outcomes that can occur. These reversals can definitely continue, and or we can also hit these continuations. Whereas London, we know as soon as prices swept the highs, we just have to take the move down. So yes, London is easier to trade while you are trading the daily cycle. What is the other variant? I did not mean to do that. The second variant is the bullish one. Price comes from an uptrend, Asian liquidity buildup, stop hunts to the low, continuation, right? New York reversal, and or continuation, right? And then what's the third one? Understanding that there are two resting POIs above and below the Asian, we have the Asian whipsaw variant. Asian liquidity buildup, stop hunts to the high, London stop hunts to the low. The real London move, New York comes all the way back down. We'll stop out people here who are trying to catch this OB. It's going to come all the way back down, tap into this that has created order flow, and run. Hopefully this is not too messy for you guys to understand. But again, I hope this helps. If this does help out with your trading, please hit that subscribe button. Please hit that like button. I'm also going to post a plethora of screenshots of the daily cycle on my Instagram so you guys can swipe through and just have a better understanding of how daily cycle works. If you want to know the Asian session times, I do use lit timing, so shout out Rem. Thank you for coming out with some of the ideas about liquidity inducement theorem. Although I also use the timings from Beat the Market Maker, and I also use timings from ICT. I also use timings from RVC. I kind of use a combination here. If you want to know what I personally use in terms of my Asian settings, make sure to reach out to my Instagram. All that will be posted in the description. But yeah, hope you guys learned something new. Hit that subscribe button, hit that like button, and I'll see you in the next video.